Hi, this is Joe. I'm going to do a stock market update. As usual, I'm going to be focused on the S&P index, but I also want to discuss some big tech leaders because they're at a really critical juncture as to which direction they want to go here. And I think it has pretty significant implications to the whole market, actually. So it's definitely worth taking a look at what the two potential scenarios are. Let's hit that subscribe button though before we get going. I'm now looking at the charts. I've got the S&P chart up here. I want to focus in on a monthly chart real quick because we've got one day left. Friday today is the only day left in the month, and the monthly bar is actually, this candle is actually still pretty good. Earlier in the day when the market was down, we were starting to see maybe a little bit of a wick forming at the top of this candle. But it actually ended up finishing the day okay. And depending on how things go tomorrow, I think overall this is ending up being a decent kind of finish to the month. If we go look at the weekly chart, we're stuck in this zone, and we've been talking about the same issues where, it's a situation where we've got sentiment issues that, probably aren't ideal for the market surging to the upside. We've also got issues where, if technology is having a good day, some of the other areas maybe not, and then vice versa. It's not really a cohesive move right now. And I think if you look at the weekly, what I'm noticing is it's made a big drive off the low, and then it consolidated for a brief period, and now it's pushing higher again. It never really set itself up as a strong move to the upside and then a consolidation that would lead to a new breakout. It's just been, the word I keep using is grinding. It's just kind of a grinding movement to the upside, which tends to be, it's a positive because stocks do continue to move higher, but it's not as dynamic of a situation that you would have in where if you took the proper time to consolidate, that could lead to much stronger gains. So anyway, if we look at this weekly, again, we're still looking at resistance around 3250 to 3350, and support, I would assume, is going to be somewhere in this 3000 area. The 40-week is around 3,050, and the 18-week is right around 3,000 now. And so you've got a little bit of a backdrop of support from these two moving averages, especially with the fact that the 18-week is rising. One of the things I wanted to mention as we look at the daily chart, because there's not a lot changing here, it was trying to break the 18-day moving average and it wasn't able to pull it off. And so we're still kind of sitting above that. But again, look at the momentum indicators. So I want to point this out because if there's one thing that's kind of bugging me a little bit, it is what's going on a momentum basis. And especially when you look at the ADX. So if I go back and look at a weekly chart, I'm not all that, or even a monthly. Let's start with the monthly. So the ADX on the monthly is at 23. I mean, it's made a big move to the upside. MACD actually doesn't look all that great. The MACD on the weekly actually looks okay. But the ADX is down and low at 14, even though we've made a pretty good move to the upside. So if I go and look at the daily chart, what I wanted to point out is I'm not all that bothered by what's going on the indicators on a monthly or a weekly. And the reason is that I have mentioned before that when the market gets very volatile and we get huge swings and broad movement in short periods of time, the indicator is going to lag, especially on the higher time frames. But if you look at what's taken place on this daily chart, we started moving up in the S&P in March, and we've been moving up for several months. And we just can't seem to get the ADX to really kick into the upside. It tried to get above 25 there in June, but then it quickly dropped back down. And so it is moving higher. And I'm not trying to give the impression that it is not, it is definitely in a positive uptrend. However, it's not a real strong trend. And I think that's relevant here because, again, if we went sideways for a long enough period and you have this low ADX pattern in place, and then you got a really dynamic breakout to the upside, then I think that could lead to an assault on the highs and maybe get some follow through. But right now, I would just consider it to be, we're working our way up, but it is real work. It is not, there's just not enough fluent movement to get any kind of real continuation to the upside. So I just want to make sure I pointed that out. Let's go and take a quick peek at the hourly. So one of the things I mentioned the last time is that we had reversed on the hourly chart, where we came down and tested, made a double top in here, and actually might be a minor new high, and the 80 and the MACD line had failed to confirm, and so we had, on a break of the 18 here, we had sort of confirmation that we're going to work our way lower. And so what I mentioned was the target for that move was, let's go to the daily, was the daily 18. And notice what's taken place. If I can zoom in, we've basically worked our way down. We did it very quickly, actually. Came pretty close to the 18, and it's sort of just been hovering above that line. So, I think the idea is this stuff does hold true, and I can do it in multiple time frames. And then I can say, okay, so the question is, does the daily hold now? Because we're kind of walking on this line. And I'm kind of questioning, is this water building on a dam? Because if it is, then it's eventually going to kind of break its way through. And then our next target's going to be going down to the weekly 18. For now, I'm going to assume it wants to hold. But I think if we had a bad day in the next 2-3 days, if it can't really jump off this line and really bounce off it to any significant degree, then you got to feel like it's weighing on it a little bit. If I look at this, the way that it's kind of creeping here, it's been close to it 2 or 3, 4 days. If we got any kind of a breakthrough, then I think you want to go again and revert back to that weekly MA as your target. So let's go back to the hourly. I know I got a little off track there, but I wanted to point out this is horizontal line of support is around 3,200. I think if we break that, that really increases the odds that we are heading down towards the support at 3,000. So that's sort of confirming evidence based on what I'm talking about on the daily chart. Real quickly, I want to talk about some things that are going on in big tech land, and I'm going to zoom this out a little bit. So this is a chart of Apple on the daily, and one thing I wanted to mention is that we're breaking the trend line, or we broke the trend line on that pullback, and we rallied, and we came all the way down to the 40, and now we're bouncing up to the 18. So the ADX pattern on Apple is in very strong condition. So it's not surprising that maybe this isn't going to go through any real deep sell-off. But I think it's important to recognize when we go and look at the weekly chart, we've made this big move to the upside. And what should happen right now is we should see a correction back towards the 18. If we're doing this in a normal, ordinary, environment where you make a strong move to the upside and then you go through a corrective wave or a corrective process or consolidation pattern, it should allow time to meet up with that 18 on a semi-regular basis. If we go back and look at what Apple did the last time, it never really pulled back to it, and then when it finally pulled back to it, it ended up breaking through. So it's actually a lot more healthy if you make quick checkbacks to the 18 along the way, and that kind of represents new buying opportunities. What concerns me about Apple, and then let's look at Adobe in a very similar position, if we go and look at the daily breaking the trend line on that, or if we go look at Microsoft, it's also breaking its trend line for the first time since really got going here, and this made it all the way down to the 40 as well. So that's the first time that's happened for that stock. So these are sort of signs that there's a little bit more risk associated with what's going on. What bothers me is, I'm looking at what's taking place in the aftermarket. Amazon and Facebook are up pretty significantly, and I'm assuming that's going to spill its way over to stocks like Microsoft and Adobe and Apple, just playing in guilt by association, just essentially playing along with what's having good news. And so if we don't get a correction here and we just take off again, and we kind of accelerate from this point, then I think you have to start thinking we're in some sort of a climax phase where, you get sort of a surging market move that ends up creating something, I think, a little bit more significant when it finally gives up and turns around. So I think it's worth noting based on the move that Apple made, you made a pretty strong and powerful move. It wasn't a full 100% from 200. It was 225 up to 400. But I mean, that's a significant run in a short period of time. It ought to take a breather. And what I've told you guys in the past is that what beautiful thing about technical analysis is that even when it doesn't work, it can be very, very helpful. So what this ought to do, what this stock ought to do, and some of the others should do, is they should consolidate and pull back. And if they don't, it's telling you something, and it's probably not a positive, because what's going to end up happening is these are going to move up so far and so fast and get too far away from pretty much any real support area that then when they eventually reverse, it's going to be more climatic and probably more painful on the way back down. And so I just thought I'd mention this because I think we're at a critical point in these stocks. So please hit that like button, and we'll talk to you soon.